In our trader rundown today, Alan Knuckman of Bullseye Option joins us now with an overall look at the market. And Alan, I keep hearing from traders the key seems to be oil. Is that true?
Well, I think that's a focus because you got to remember we just made new all-time highs in 2 out of the 3 major indexes, and that's with oil having this big sell-off. Oil was in a bear market territory just last week, but reversed. So if those depressed stocks can stabilize, the market can move much higher.
Right. Oil rallied about $2, and that was the biggest excitement in the market yesterday, really. So what would be a play for you here?
Well, looking at oil, it was interesting that last week it made some new relative lows, multi-month lows, and then it closed positive on a weekly basis. So that's pretty important that maybe a bottom is in. 43 for crude is a pretty important level because 53 was the extreme high, 33 was the extreme low. So now we're right back to that midpoint. If it can get above that, then we can get the market pushed to the upside.
Now you're watching the ETF XLE.
Right.
So what do you see there?
Well, XLE is a more broad vehicle. If you look at it, it's been trading in a range between $64 and $68 for 3.5 months. So the upside target initially 72, that's the annual high, but the upper target is 75, which is the halfway point of the 2014 high, which was a long time ago and a lot higher at 100, to those extreme lows at 50. So 75 is where I'm looking forward to get to.
What would be your options trade?
The options play looking at January option, again time, because these markets are going to fluctuate as we all always know. So I'm looking at a 60 call, which is about $8.50 in the money. It's trading for about $10 right now. So it's a deep in the money option with a lot of intrinsic value. It's going to act like the XLE, but you have limited risk, and I put in a stop loss at half. So then, you limit your exposure.
Thanks for coming on the show and have a great trading day, Alan.
All right.